which means in the longer term, the share price of Amazon should go up. So yeah, if you can't beat AI in terms of being an employee, then at least own AI so you benefit from the upside.
Hmm. It's an interesting one, but I love what you just said there in terms of I guess benefiting somehow, particularly if you're actually affected as well, and even if you're not affected. Hello and welcome to the Woke Finance Podcast, the podcast discussing all things finance and all things finance related. It's your boy Peter, and I'm with my co-host, my bro Jax. How are you today?
Yes, Peter. I'm doing very well, doing good. The weather's changing, as you can tell. It's getting darker earlier here in the UK. Not long ago, we actually moved the clock forward. So it's getting darker earlier and it's definitely getting colder. But that doesn't stop us from providing good quality content through the Woke Finance podcast. It doesn't stop us from going out there into the community, providing good quality financial education for young people, predominantly in schools and other institutes as well. So yeah, really, really enjoying our time as we come towards the end of the year. But yeah, it's definitely getting colder and darker.
It really is. It really is, man. And as Jack said, it's coming to the end of the year. There is a particular season upon us, which is on December the 25th. Do check out our one of our latest episodes, episode 240, which was released not too long ago. Does spending money on someone prove your love? Preparing for Christmas. Do check that out. Just a reminder, in terms of preparing for spending around the season upon us. Now, for our listeners, we just want to give you a warm, warm, warm welcome. Thank you very much for your ongoing support. The very fact that you are listening to this, you are supporting us. You also know what you can do if you want to go beyond that. So I'm not going to dwell too much on that, but please do so. Now, Jax, for this episode, we're going to be reflecting on some news from a particular company and then talk about how this actually relates to what could potentially be going on in the economy as well. Now, Jax, for those that don't know, every quarter or so, some of these big companies, and when I say big companies, I mean companies that are listed on the stock market, they will release their earnings for the world to see what is going on with the finances, with the direction of the company, and how the company is performing, etc. And one of the companies, which is the big boy company Amazon, they made some news which we're going to reflect on. Do you want to maybe just give a bit of context?
Yeah, so I mean, I think this even came out before their earnings, which was the fact that unfortunately they were laying off up to 30,000 staff or employees, which of course is not great for the staff. But there was also a narrative about the replacement of those employees with artificial intelligence, AI. So yeah, that was obviously some news that came out before the earnings. But then yes, as you said, the earnings was recently released and the stock price of Amazon jumped up by more than 10%, and that's because their AWS part of the business has been doing really, really well. So yeah, very, very interesting times seeing people actually unfortunately lose their jobs being replaced by intelligence, and at the same time seeing the stock price of a company like Amazon go up by more than 10%. It's a huge company already, but to go up even more than 10% due to the fact that their cloud business and their technology business is doing really, really well. So yeah, very interesting.
Crazy because you would think that when you hear of announcements like letting stuff go, you would think that would affect the stock
Yeah.
price negatively.
Correct, yeah. Normally, if you hear that a company's getting rid of their employees, it's usually a warning sign, correct? It's like it's not good news, it's bad news. It's why are you getting rid of your labor force? Because ultimately, labor force is a factor of production. The more labor you have, the more capital you have, the productive you are, the more your business should grow, and in turn, your share price should grow as well. So yeah, when you hear that the labor force is being shrinked, that's not good news generally speaking. But as I said earlier, it's because it's then they've gone on to say it's being replaced by AI. So in other words, the labor force is not being shrunk and
mm,
actually is being replaced by a more efficient
mm,
labor force in the name of AI. A workforce that don't take holidays and
mm.
don't get sick and don't need employee benefits. So yeah, it's very interesting times we're in.
Hmm. I mean, there's been for the last few years, there's been the ongoing question, will AI replace our jobs? And it's an ongoing question, and we're seeing things like this. I mean, there's a few answers to that. I don't think it's just as blanket as that, but it's yeah quite interesting to see now. For people that do see these things, Jax, and even investors in a company like Amazon, and just for people in general, what does this mean for us when we are observing these things happening around us?
Yeah, I think, of course, it's not the most encouraging to see people lose their jobs and for people's jobs to be replaced by AI. It can cause a level of anxiety, right? To know that potentially your job may be at risk. So that's the first point I want to mention. However, for me, what's really, really important is to not be scared of what can potentially happen, but how to respond to it. There are always potential opportunities. There's sayings like AI may not take a job, but maybe someone who knows how to use AI may. So, whether you believe that or not, I think what that highlights is we probably want to improve our AI skills and knowledge base. There's that, but also, particularly for our historic listeners who have been with us for years or so on and so forth, we've always talked about ownership. And one of the phrases that I like to use now is if you can't beat AI, at least own AI, right? So the example we've just given is Amazon's business doing really well, even after laying off 30,000 staff or announcing that they're going to lay off 30,000 staff because of AI. So, you can own shares in companies like Amazon and benefit from what actually means that they will have better margins. Why? Because their cost of production will go lower because they don't have to pay AI the way they will pay employees, which means their margins will be better. We call that margin expansion, which means in the longer term, the share price of Amazon should go up. So yeah, if you can't beat AI in terms of being an employee, then at least own AI so you benefit from the upside.
Hmm. It's an interesting one, but I love what you just said there in terms of I guess benefiting somehow, particularly if you're actually affected as well, and even if you're not affected. Yeah, it's very interesting. And Jats, at the beginning, I mentioned, in terms of what we're seeing with Amazon, how this might link to, I guess, what's kind of going on in the economy in general. And I think you had some thoughts on that.
Yeah, absolutely. So there's a terminology that's been thrown around and spoken about a bit more recently, and it's called the K-shaped economy. Yes, K as in the letter K. And at first it's quite difficult to understand what a potential K-shaped economy could mean. But all it is when we look at the letter K, we've got the vertical, the down, the first part of the K letter, and then you've got two other sections. One is going from the bottom left to the upper right, and the other one is going from wherever it is, but to the bottom right, right? So all that really signals, if you look at the letter K, is that something's going up and something's going down. And what that represents in the K-shaped economy is the fact that the income and wealth gap is widening.
Mm,
So one is going from bottom left to upper right, and one is going from upper right to down to the bottom right. And the reason that's happening, or the ideologies behind that are the fact that the rich are getting richer in this economy. They're still happy to spend money. They're comfortable purchasing their luxuries. Even in what we have now as an economic backdrop, where there's high interest rates, there's a bit of strain on unemployment and that kind of stuff. But the rich seem to be very comfortable. And I suspect, well, yeah, I suspect that the reason behind that is because one, most of the wealthy and rich are owners, so they own assets. And if you even if you look at the good old S&P 500 as a benchmark, over the past few years, it's compounded annual growth rate is like about 20% or so,
Mm,
which means if you, I think it's even more than 20%, if you invested £10,000 in 2022, that £10,000 would be worth £17,000 today, just 3 years. Now imagine if you scale up that initial pot
mm,
to 100,000 or 1 million, you can imagine how
mm,
quickly people's wealth has grown. So there's that. And the second part to that as well is yes, interest rates. Higher interest rates is usually a strain on the economy and participants like ourselves and so on and so forth. But if you have a large cash pile, you also benefit from the risk-free rate.
mm,
You benefit from that higher interest rate as well. So they can earn up to 4.5% on their cash with no risk at all.
mm.
But the flip side is if you don't own assets and you don't have this cash pile, and you have debt, even in the form of a mortgage, then you will see that your budget, your costs are going up because of that higher interest rates as well. And of course, the economy is being strained, so you may have also lost your job. That's what's really causing the disparity and the widening of the gap of the income and wealth distribution. And that's what we call the K-shaped economy.
Wow, that's so interesting. So when we see all of these things in the news, cost of living crisis, energy crisis, everything crisis that's hitting the pockets of people, people are struggling. It's hard to even imagine that there are a section of people maybe at in terms of how you describe the K-shape economy, those that are moving towards the top right, they are actually, I would even say just benefiting, but they are continuing to flourish in terms of from a wealth perspective, because as you said, the economy from a wealth perspective has been going forward. Things, the stock market has been going up, so they continue to benefit. And as you even just said, the interest rates again, those that are struggling might be thinking, oh gosh, interest rates are going up, inflation, all of that stuff. But as you said, the wealthy are able to even save more of their money risk free at 4.5%. So yeah, it's quite, I can imagine it'll be quite hard for those that are perhaps struggling to even imagine that there are people that have benefited so much in this period. And from the sounds of it, Jax, what you're saying is that the one of the main differences is that the those who we look at as wealthy have just owned things during this time, and they've grown and allowed things to compound. And I'm sure it didn't just start from 3 years ago. It would have
No,
started over decades and
yeah,
years and stuff. But that is one of the stark differences between what's happening here.
absolutely, absolutely. And I think another phrase I've heard to describe the economy is something called an asset economy, and all that really means is the same thing. The rise or the rate in the rise of asset prices outpaces the ability for the average person to even save money.
Hmm.
Okay, so as I said, it's not even just the stock market. We've got asset prices, right? Property prices, and actually, Peter, this year it's like everything is flying, right?
Mm,
It's rare to be in an economy where both, financial assets like stocks are flying, property prices are getting higher, but even gold prices is at all-time highs. Everything's at all-time highs.
hmm.
And so with that in mind, if you're not participating in this, then of course the gap will only get wider. And I think, my word of encouragement, and I say this with a lot of humility and a lot of understanding that it is very hard out there. Very, very hard out there. And so even if you're just managing to stay afloat, that is an achievement. Um, but we talk about stuff like this so that we are aware of how the economy can work and why, if we can strive for a way to own assets over the long term.
Yeah, man. And for our listeners, we have loads of different episodes which talk about owning assets, different types of assets, how to begin investing, how common mistakes investors make. Please do just wherever you're listening to this on, if it's on your phone, on Spotify, just scroll through our list of episodes. You will see quite a lot of information to hopefully encourage, but also actually spark something to move into action. So yeah, Jax, man, that's very deep stuff. And perhaps some of our listeners over in the US, in a particular city, which I'm going to give a shout out from because we're getting new listeners over there. We had a sudden influx from that particular area, but perhaps some of them, Jacks, are asset owners or thinking about owning assets. And that area, Jacks, is Dallas in North Texas.
Yeah, yeah, I saw we had a huge influx of listeners from Dallas, sorry, not Dallas, Dallas. Welcome to the Woke Finance Podcast. You are here with myself, Jax, and the co-host, Peter. And on this podcast, we talk about all things finance and all things finance related. But if you want to know more about what we do, because we do serve in a community, you can head over to www.wokefinance.co.uk. That's www.wokefinance.co.uk. And if you want to engage with us on social media, we are predominantly on three platforms. We are on LinkedIn, we are on Instagram, and we are also on TikTok. If you search for Woke Finance, you will be sure to find us. So, yeah, welcome to the episode. I hope you were enjoying and gaining tons of value.
Absolutely, absolutely. So, Jax, we've taken a bit of a, and yeah, just another massive shout out to our listeners over there and all over the world. Jax, so yeah, we've taken a look at, this phrase, the K-shaped economy, and why it's being talked about right now and the importance of it, but also linking it to, I guess, what we've seen with Amazon and other companies. It's not just Amazon. There's been other big companies out there that have done layoffs and stuff in the name of AI, so to speak. I guess, Jats, is there anything more that we can take from, I guess, the evidence that we've gathered from seeing the K-shaped economy and these layoffs at Amazon?
Yeah, I think one of the things that I like to remind people is the economy tends to move in cycles. So there is boom, there's bust, there's peaks and troughs, there's corrections and there's depressions, but there's contraction and then there's expansion. So it's really important to remember that the economy does move in these cycles. And so it's not going to stay like this forever. It can be, it can revert very quickly. However, one thing I would say is that regardless of where the economy is and where the business cycle is, there are always going to be opportunities and there are always going to be, and I'm trying to find a different word for this, but almost victims, or people that don't benefit. Let me put it that way. People that don't
Collateral
benefit.
damage?
Yes, yeah, collateral damage is probably a better phrase for of what's actually happening in the economy. And I think what we can learn about this is how can we position ourselves to be in a place where whatever's happening in the economy, even if we're not necessarily beneficiaries, that we are not collateral damage.
Mm,
And one of those things we can do is to literally just follow the principles and the timeless ideologies that we've been talking about on this podcast for 6 years now, which is to find ways to earn more than what you spend, use the difference to pay off any bad debts, create some sort of emergency fund, and then to invest in assets that can produce an income or appreciate in value over the long term. As long as we can follow some of these basic principles over time, regardless of where we are in the business cycle, we should be able to do well and not struggle with the economic state that we're facing.
mm. Love it, love it, love it, man. An episode that comes to mind for our listeners to tune in right now, even if you think you've heard it, do tune in. That's episode 211, and that's preparing your finances for 2025. Again, we just talk about some of those steps that Jats have mentioned and beyond as well. We really want to support you with the information you need to I guess, yeah, to get on a particular personal finance journey. So hopefully that is of some use. But now, Jax, man, really, really useful to go over this. And from the education piece in terms of understanding things that's going on in the community. But hopefully, as we've said, something for our listeners to take away. But Jax, any final words before I do let you go?
Yeah, I mean, I would encourage new listeners to go back and listen to our previous episodes. You can go all the way back in even to our first episode. There's so much value to be had and to be listened to. Looking forward to the episodes coming up for the rest of this year, and we will definitely also have an amazing announcement next year as well. So stay in tune for that.
Come on, come on, come on, come on. Thank you very much, Jax. Thank you very much for our listeners. We hoped you gained tons of value. And remember all,
Stay.
stay woke.